Welcome back. This is Jacob Milliken, owner of 9M Investments, and today we'll be going through portfolio income update for June. So June was a bit of a mixed market in the equities. S&P was down, NASDAQ was down, Dow was up a little bit in June. But the important thing for us is to make sure that our income works in all markets, whether they be up, down, sideways, or somewhere in between. So for June, we were able to produce 15.87% yield, annualized, obviously. So again, very, very good month in June, really not tied to what the markets are doing, whether that be equity markets or bond markets for that matter. So let's walk through the different sleeves and see how things broke down. So obviously, private real estate is a big part of what we do. Current holdings include BREIT, Blackstone's Real Estate Income Fund, and Nuveen's Global Cities REIT. Both of these are built for stability, monthly cash flow, and depending on where you have these in your portfolio, whether they be in qualified accounts or non-qualified accounts, there can be some tax advantages to those non-qualified accounts. So again, for me, it's all about the diversification of what these two funds own, and again, the ability to be stable even in sideways markets. Next sleeve of the portfolio is private credit. Again, this is all about yield. So the different funds that we currently hold, again, Blackstone's private credit fund, Blue Owl's private credit, Carlyle's tactical private credit fund, Calmos's Newburgh, Blue Owl's alternative credit fund. All these funds are generated to bring yield into the portfolio. So currently, these range from anywhere from the low 8% all the way up to 10%. Again, with all of the private funds that we use, the big part of what we're looking for is stability in that day-to-day price. So very, very rarely do these move in big ways, especially on a daily basis. And again, the big part of this is diversification. We're not just loaning to companies. Some of these are asset-based and have different sleeves within that make them well diversified. So not any one move in any one market is going to make these move or change on a daily basis. The second or third part of the portfolio sleeves are the ETFs. So these are liquid. Obviously, we can trade these on a daily basis. Current holdings are PCMM, QQQI, CAIE, and CAIQ. Again, bring liquidity to the portfolio. Each one of these has a little bit of a different focus. CAIE and CAIQ in particular are great within taxable accounts, individual accounts. Their distributions are considered return of capital, so that really helps make sure that we can be as tax efficient as possible. And then lastly, structured income notes. June was a fairly busy month with the portfolio. We had 8 income notes that were called during the month. We laid out 5 new income in notes. Of those 5, those yields were in the mid high teens. Again, how we're able to get 15.87 has a lot to do with the income structured notes that we use. Portfolio remains diversified across indexes, maturities. Again, we're going to level this out where not any one note drives performance in the portfolio. It's all about the diversification within all these structures. So again, 15.875 or 15.87%. I'm very happy with that. Obviously, that's a little bit higher than normal. Probably will come down a little bit next month. The way things roll off and come on, sometimes those can kind of peak those little numbers a little bit. But again, clients don't complain. They like that, and we'll take it as well. So I hope you have a great day.